If you're over 60 and you're planning any kind of home renovation this year, a walk-in shower, a stair lift, wider doorways, grab bars, and you don't know about this program, you could be leaving up to $3,000 sitting on the table with the CRA, money that's already yours, money you paid in taxes. And the worst part? Most seniors find out about this after they've already paid the contractor, which means it's too late to plan properly, too late to ask for the right kind of invoice, and too late to make sure every dollar counts toward this credit. Stick with me for the next 15 minutes because near the end of this video, I'm going to show you a second, lesser-known way to stack this credit with a provincial program. And for some of you, that could mean thousands more on top of the $3,000. I'm also going to walk you through the exact mistakes that get seniors' claims rejected so you don't make them. Let's get into it. Point number 1, the Home Accessibility Tax Credit. What it actually is. What is it? This is officially called the Home Accessibility Tax Credit, or HATC for short. It's a federal, non-refundable tax credit designed for one purpose, to help seniors and people with disabilities pay for renovations that make their homes safer and easier to live in permanently. We're talking about things like walk-in bathtubs, grab bars in the bathroom, wheelchair ramps, widened doorways, non-slip flooring, and stair lifts. The CRA doesn't just want to see you spend money. They want to see you making your home safer to age in place instead of moving into a care facility. That's the whole point of this credit, and it's part of a bigger federal push to keep seniors living independently for as long as possible because it's both better for you and cheaper for the healthcare system than a long-term care bed. What is it worth? Here's the number that matters. You can claim 15% of up to $20,000 in eligible renovation expenses. Do the math, and that comes out to a maximum credit of $3,000 back on your tax return. And here's something a lot of people don't realize. If you're a senior and you qualify for the disability tax credit, the same set of renovation expenses can sometimes be used to support both claims. So it's worth having a tax professional look at your specific numbers rather than assuming you're only eligible for one or the other. How do they get it? You claim this on line 31285 of your federal tax return. You'll need to keep every single receipt and invoice from your contractor, and this is critical. The invoice needs to clearly show the address where the work was done, and it needs to describe the work in enough detail that CRA can confirm it's a qualifying renovation. Cash deals with no paper trail will not qualify. If your contractor offers you a discount for paying cash under the table, do not take it, because you'll lose your ability to claim this credit entirely, and you'll have no protection if something goes wrong with the work later. Now, I know what some of you are thinking right now. Is this actually legal, or is this some kind of gray area loophole? I want to be completely clear with you. This is not a loophole in the sneaky sense. This is a fully legislated official CRA program. It's been on the books for years, and it exists specifically so seniors like you don't have to choose between staying in your own home and paying for the renovations that make that possible. The reason most people call it a loophole is simply because barely anyone knows it exists. Your accountant may not have brought it up because they assume you'd mention it first, or because they're rushing through a stack of returns during tax season and this one credit slips through the cracks. It's not fraud, it's not a gray area, it's just underused. Point number 2, which renovations actually qualify? What is it? Not every renovation counts. The CRA has specific criteria, and it comes down to one simple test. Does the renovation help a senior or a person with a disability gain access to their home, be more mobile inside it, or reduce the risk of harm inside or around the home? If the answer is yes, it likely qualifies. If the renovation is purely cosmetic or purely about maintenance, it does not. What is it worth? This matters because it directly affects your $3,000. Qualifying renovations include walk-in bathtubs and showers, wheelchair ramps and lifts, handrails and hallways and stairs, non-slip bathroom flooring, widening doorways for wheelchair or walker access, lowering kitchen counters or cabinets for easier reach, and even things like lever-style door handles that are easier to grip than round doorknobs for people with arthritis. On the other hand, general maintenance like reshingling your roof, replacing a furnace, or repainting a room does not qualify even if it happens at the same time as your renovation. So if you're getting a contractor in for a bathroom remodel and they also patch some drywall or repaint the hallway, make sure they invoice the accessibility work separately from any general repairs, or you risk having your entire claim questioned. How do they get it? Before you sign a contract, ask your contractor directly, can you itemize this quote so the accessibility related work is listed separately from any general repairs or upgrades? This one sentence can save you a massive headache come tax season because CRA auditors will look at vague invoices with suspicion, and a bundled invoice with no breakdown is one of the most common reasons a claim gets flagged for review. Keep a folder, physical or digital, with every invoice, every payment receipt, and even before and after photos of the renovation. Photos aren't required, but they make your claim bulletproof if CRA ever asks questions because they show exactly what changed and why. Some of you are probably wondering, will claiming this credit affect my GIS or my OAS payments? Great question. And here's the honest answer: no. The Home Accessibility Tax Credit is a non-refundable credit, which means it reduces the tax you owe SI. It does not count as income, and it will not show up as income on your return. That means it has zero impact on your guaranteed income supplement or your old age security. You are not putting your other benefits at risk by claiming this one. This is a common fear I hear from seniors about almost every credit or benefit, and it's worth repeating. A non-refundable tax credit is fundamentally different from income, and CRA treats it that way on every calculation that determines your GIS and OAS amounts. Point number 3, who actually qualifies to claim it? What is it? This credit is available to what CRA calls a qualifying individual, meaning you're 65 or older by the end of the tax year, or you qualify for the disability tax credit at any age. It also applies if you're renovating a home for a qualifying family member like a parent or grandparent, even if you don't live there yourself. What is it worth? This is huge for a lot of families. If your elderly parent lives alone and you pay for the renovation out of your own pocket to make their home safer, you as the adult child can claim the credit on your own tax return as long as your parent qualifies as a senior or someone with a disability. That means families can pool resources, put one person's name on the claim, and still get the full $3,000 benefit. For a lot of families dealing with the rising cost of home care, this can be the difference between affording the renovation now versus waiting another year or two while a parent's mobility keeps declining. How do they get it? The person claiming the credit needs to be either the homeowner or someone who paid for the renovation on the qualifying individual's behalf. Keep clear documentation showing who paid the contractor. Bank statements, e-transfers, or canceled checks all work. If multiple family members are chipping in, sit down together and decide in advance who will be claiming the credit, because CRA allows the total claim to be split between family members, but the combined total across everyone still can't exceed that $20,000 threshold. It's much cleaner to decide this before the work starts than to try and sort it out after the fact when receipts are scattered between 3 different people's wallets. Here's something else I want to address directly because I know it's on your mind. What if I already did the renovation last year? Is it too late? If the renovation happened in a previous tax year, you generally cannot go back and claim it on this year's return unless you file what's called a T1 adjustment request for a prior tax year, and there are time limits on how far back you can amend a return. Typically, you have up to 10 years to request an adjustment, but the sooner you deal with it, the smoother the process. So if you renovated in 2023, 2024, or 2025 and never claimed this, don't assume it's gone. Call CRA or a tax professional and ask about filing a T1-ADJ form before you write it off completely. I've talked to seniors who found out about this credit 2 or 3 years after they did the renovation, and many of them were still able to recover it through this adjustment process. Point number 4, the mistakes that get claims rejected. What is it? Before we move to the provincial stacking strategy, I want to walk you through the specific mistakes that cause CRA to deny or reduce a home accessibility tax credit claim, because knowing these ahead of time is the difference between a smooth $3,000 refund and months of back and forth letters with CRA. What is it worth? Every single one of these mistakes can cost you part or all of your $3,000. The most common one is paying in cash with no formal invoice. CRA needs a paper trail, full stop. The second is bundling accessibility work with general renovations on one vague invoice, which we already covered. The third is forgetting that the renovation has to be to your principal residence, or the principal residence of the qualifying family member. A cottage or rental property generally does not qualify unless very specific conditions are met. The fourth is missing the filing deadline for the tax year the renovation was completed in without filing that T1 adjustment we talked about. And the fifth, which catches a lot of people off guard, is assuming that furniture or standalone medical equipment, like a stair lift you bought secondhand and installed yourself with no invoice, qualifies the same way a professionally installed and invoiced renovation does. How do they get it? The fix for all 5 of these is almost always the same. Use a licensed insured contractor who gives you a proper itemized invoice with your address on it. Pay by check, e-transfer, or card so there's a bank record. Keep the invoice and proof of payment together in one folder, and file your claim in the same tax year the work was completed, or file a T1 adjustment as soon as possible if you missed it. If you're ever unsure whether something qualifies, it costs nothing to call CRA's individual tax inquiries line and simply ask them directly whether your specific renovation counts before you commit to the work. I know some of you are thinking, this all sounds like a lot of paperwork for one credit. I hear you, but consider this. The paperwork here is exactly the same paperwork you should be keeping anyway for warranty purposes, in case something with the renovation breaks down the road, or in case you ever sell the home and need to show the upgrades were done properly and legally. You're not doing extra work for the CRA, you're doing the same organizing you'd want to do for your own peace of mind, and the $3,000 is simply a bonus for staying organized. Point number 5, the second layer, stacking with provincial programs. What is it? This is the part I promised you at the beginning. On top of the federal home accessibility tax credit, several provinces run their own separate home renovation or accessibility grant programs. These are not the same as the federal credit. They're additional programs run by different levels of government, and in most cases, you can use both together. What is it worth? Depending on your province, this can mean an additional grant or rebate ranging anywhere from a few $100s up to several thousand more, specifically for accessibility modifications, energy efficiency upgrades tied to aging in place, or property tax deferral programs that free up cash flow so you can afford the renovation in the first place. The exact dollar figures and eligibility rules vary significantly by province, and they change from year to year. So this is one area where you'll want to check your specific provincial housing authority or senior secretariat website directly rather than relying on last year's numbers. How do they get it? Search for your province's name plus home adaptation program for seniors, or call your provincial seniors information line. Most provinces have one specifically for this. Ask them 2 questions. Is this program compatible with the federal home accessibility tax credit? And does receiving this grant reduce the eligible expenses I can claim federally? That second question matters because in some cases a provincial grant reduces the total renovation cost you can then claim federally since you can't claim the same dollar twice. You want that answer in writing before you proceed, so there are no surprises at tax time, and so you can plan your renovation budget with accurate numbers from the start. I know some of you are thinking, this sounds complicated. Is it even worth the hassle for $3,000? I understand that reaction, but think about it this way. This is $3,000 of your own tax money coming back to you for a renovation you likely need to do anyway to stay safe and independent in your own home. The alternatives to a fall, a broken hip, a move into assisted living cost vastly more, both financially and in your quality of life. Spending 20 extra minutes organizing your receipts is a small price for that kind of protection, and once you've done it once, you'll know exactly how to do it again next time. Point number 6, planning your renovation timeline. The smart way. What is it? This last point is about timing, specifically how to plan a renovation so that it lines up cleanly with the tax year and maximizes what you can claim, instead of accidentally splitting a project across 2 years in a way that creates confusion. What is it worth? Getting the timing right can mean the difference between a clean, fully documented $3,000 claim in one tax year versus a messy partial claim spread across 2 returns that's harder to track and easier for CRA to question. If you're planning a bigger renovation, say a full bathroom accessibility overhaul that costs close to that $20,000 cap, timing the start and completion within a single calendar year where possible keeps your paperwork simple and your claims straightforward. How do they get it? Talk to your contractor early about realistic timelines, and if a project is going to stretch across a calendar year end, ask them to invoice the work in stages that reflect what was actually completed and paid for in each year, rather than one lump invoice at the very end. That way, if part of the work happens in one tax year and part in the next, you have accurate documentation to claim each portion in the correct year. It's a small planning step, but it removes a lot of confusion later. Let's bring this all together. If you're planning any renovation to make your home safer as you age, walk-in showers, grab bars, ramps, stair lifts, wider doorways, here is your complete action plan. First, get an itemized quote from your contractor that separates accessibility work from general repairs. Second, keep every receipt, invoice, and proof of payment in one folder and make sure invoices show your address and a clear description of the work. Third, claim your eligible expenses on line 31285 of your tax return up to that $20,000 cap for a credit worth up to $3,000. Fourth, if you already renovated in the last few years and never claimed it, look into filing a T1 adjustment request before that 10-year window closes. Fifth, call your provincial seniors line to see what additional programs you can stack on top of this federal credit. And sixth, if your renovation is a bigger one, plan the timeline with your contractor so the work and the paperwork line up cleanly with a single tax year. This is real money sitting there waiting for you, and the only thing standing between you and that $3,000 is a bit of paperwork and knowing where to look. If this video helped you, do me a favor. Share it with a friend, a neighbor, or a family member who's been putting off a renovation because they thought they couldn't afford it. Drop a comment below and let me know which renovation you're planning, or if you've already claimed this credit before and what your experience was like. And if you want to stay ahead of every benefit, credit, and program the government doesn't advertise loudly enough, hit subscribe, because we cover a new one of these every single week. Stay safe, stay independent, and I'll see you in the next video.